Hi everybody, welcome to Trading Conversations. You are here, my friend, because you believe that profitable trading is one of the most efficient ways to attain financial freedom and can be achieved as long as you are willing to put in the hard work to develop your trading competency. Our goal with this show is to introduce you to the traders who have dug through the trenches and emerged at the other end. From the sharing of their trading stories, strategies, workflows, and best practices, I hope to help you shorten your learning curve as you embark on your journey towards trading mastery. Today's guest is the founder and chairman of the largest and only public listed online stock brokerage firm in the Philippines, with a client base of more than 300,000 investors and handling more than $1 billion of US dollars in customer assets. For more than 40 years, this gentleman, also the former governor of the Philippine Stock Exchange, has been navigating the stock investing and equities trading industry as both a visionary entrepreneur and a super passionate trader. Now that the financial security is no longer a big concern for him, he is now focusing very much on campaigning for financial literacy to the general public, both in the Philippines and which is his native country, as well as in other parts of the world. I'm sure there are many great stories and learnings that he can share with us in this interview. So please join me to welcome Edward Lee, the founder and chairman of COL Financial Group. Hey Edward, thanks for joining me in this episode of Trading Conversations. I still remember how I had the fortune to meet you up personally in Singapore last year to chat about trading. Not just over one afternoon, but actually over two consecutive afternoons. That was really a fantastic opportunity for me. And you know something, you really made an impression on me with your humility, despite all the successes that you have achieved, both as a business leader in the stock industry as well as an accomplished trader. I understand that you probably are already a famous trading personality in the Philippines already, but as many of our audiences are actually based out of the Philippines, it would be really great if we can start this interview with a little chat about your past journey. So do you mind sharing with us how you actually started your journey? Were you a trader first or an entrepreneur first? How did it all begin for you, Edward?
Well, thank you for inviting me, Philip. Just to give you a background, I was, at a very young age, I was exposed to what they call the JA Junior Achievement Program, we were exposed to become an entrepreneur at a very young age. Probably I was 17 years old in 1972. And what happened was that part of it was we have mentors that are coaches that are helping us become entrepreneur. And I was invited by a coach wherein he works for a finance. He's a CFO of what we call the Jardine, at that time, Jardine Davis. No? And so we visited him, and I saw all these charts at the back of his office, and I asked him what this is all about. And what he did was, he said, these are all stock charts of a publicly listed company. And it was the first time he exposed me, I was exposed to the stock market. And of course, the Bible of all trading, market timing is really the technical analysis of stock trades by Edwards and McGee. So I started reading a little bit about it. And of course, like anything, since we are basically entrepreneurs, we opened an account and started investing in the market. The sad part about investing is that when you're young, your adrenaline is there. You want to make money as soon as possible, right? So you go to a process of from an investor, you become now a speculator. So I was exposed to market timing, and I started doing it immediately. And of course, by 1974, when the stock market crashed, you know, it wiped all of us out. And that was the beginning of understanding how to really try to learn and how to do it properly.
So how old were you at that point in time?
At 17, so bankrupt at the age of 18.
Wow.
Yes,
you were trading the Philippines market, or?
Yes, Philippine market, yes.
Okay. And then what happens thereafter?
Thereafter, I had to go look for a job, right? So I started working for a computer center, and started making some money so that I can go back to the market. So for 10 years, from 1973 to 1983, it was trying to learn how to do it properly. And of course, in the late 70s, early 80s, we were exposed already into the commodity market, right? I mean, so that's the reason why market timing is more important, because it's highly leveraged, and you learn how to do the proper buy stops, proper setups, proper cut loss, because it's a leverage market. So I was exposed to the commodity market at a very young age also, maybe way back in early 80s. And then, of course, the Philippines is in a political problems. We had huge problem. And we were seeing a lot of the global market was going up in the 80s, except the Philippines, because the Philippines was under martial law. And so there were a lot of companies that I started investing in, become an investor because of its value, and started accumulating stocks from 1983 to 86, until the whole market, because there was an EDSA revolution, the whole market just melt up because of this EDSA revolution. So there were some stocks that we were buying at 3, 4 cents, 5 cents. It went up to 1 peso. So the 20, 30 baggers was there because we were accumulating during neglect periods because of the huge disparity that was going on. And that was after. So I sold a lot of the stocks, and I bought a brokerage house and changed the name to Citisecurities. That was the beginning of 1986, was because of the profit that I got from during those periods. And after I sold it, I bought into a company called a local brokerage house and changed the name to Citisecurities. So CitisecOnline, which is COL Financial today, is from there. So we've been in the business since 1986, so almost 33 years already. So the journey is from an investor to a speculator. Then eventually you become a market promoter or a market operator, and then you get into trouble, right? So you look for values and you get stuck. So I became a director of one of the oldest holding company here. One board seat is not enough. We have to buy 2 board seats, and the prices did not even go up. And until I learned from them, after I sold, I became an issuer. So it's a long process. CitisecOnline or COL Financial was born in 1999 because of the experience I got in 1995, 96, 97. During that time, we were buying a company, a holding company, net asset value of about 8 billion. The company was still 2.5 billion. And we started accumulating. 1 board seat is not enough. We bought 2 board seats. The price didn't even go up until they issue a rights for 1 billion shares to dilute us. And then, of course, that was going to the Asian crisis now. But I was very fortunate to be able to get out. And then after that, I said, I'm not going to do this anymore, right? So then I set up CitisecOnline, which is to be a publicly listed company. So we've been, COL Financial is already for 20 years. So we started with 270 customers. Today we open 200-300 customers. So we're about 300,000 customers already. So we became the leading online broker here in the Philippines. So we do a lot of education. We do a lot of financial literacy education. The challenge we had in the early 2000s when we were educating people how to time market was that to convert, to make people start investing, they need to understand all these market timing tools. The sad part is that by 2000, we started educating them in market timing. Our original model was market timing. It was 2005. So they started doing well, 2006. And then 2007. During July of 2007, we can see the market turning down already. Then we were warning people to get out. But of course, when you're doing well, they only believe they want what it's called. They only want to hear what they want to hear, right? And that's a normal problem of most people. And then when the market collapsed, 2008, we have to change the business model already. So what we did was we create what we call the easy investment program, more long-term. And then from there, you catch everybody. So make it simple for people to invest in the market. And those who are interested in market timing, which is trading, then we convert them. So a lot of education for the last 20 years. Yeah,
I see. I see. So it's really more about getting people to start to be aware
that's
about
correct.
stocks as a asset class first, and bring them in from a more passive kind of circumstances. And then once they are in, they might be interested to know more. That's when you let them know what are the alternative strategies and methodologies they might potentially use to actually get a more active exposure to the market itself. So do you personally see yourself as an accomplished trader even before you started CitisecOnline?
Yes, of course. Because from a speculator, once you become successful, then you want to go into the market promoting, meaning you want to be, I can't say market operators, right? So we basically identify companies that we like, we accumulate it, and then we start promoting it. No? So it's a lot of values or a lot of story-based informed speculation. And then from there, so we were doing so well already. So we are an accomplice. The answer is yes, we are an accomplice. We know the different techniques already of trading, of speculation, and then from there, then you move yourself to the next level, which is market operation. So meaning identifying these companies and then promoting it. So those are the reasons why we eventually get into trouble, right? I mean, you get stuck to a particular stock or issue, and then you accumulate it thinking that it's going to do well, but of course these are the challenges that we have. But if I didn't go to those process of market promoting and then getting into being a director of a listed company, I wouldn't be able to be an issuer, meaning I wouldn't be able to do what I did, wherein listing a business itself and becoming an issuer. Yes.
Okay, so do you personally still actively trade thereafter after you started?
Of course. I'm if you look at what I did was I basically I have some trading strategies which you can watch me in YouTube. So what I did was I showed people how to do passive investing, and then active investing, then active trading. Inside active trading, there are basically five kinds of trading strategies, from a trend trading to a momentum trading to a swing trading. These are classified as trend trading, right? And then after that, it's counter trend trading, which is capitulation, which is a mean reversion, and then understanding the three different reversal patterns, which basically is it's a spike, a V with a square root, a V with a double bottom, and then what we call an L. An L today, that L is like a rounding bottom now. So those are the things which also I've been very actively in the social media. I'm doing a lot of workshop to teach people how to do it properly, do it the right way. Because the problem is that we normally don't do that very actively in social media. We just teach long-term investing, what we call the passive investing, which is just an easy investment program. So those are the things that which we really believe that long-term, if you understand, believe in the Philippine, we call it the Philippine growth story, and the earnings, compounded rate of return is about 10 to 12%. I mean, there's no excuse after 10 years, you're going to be a millionaire, right? I mean, it's just a very simple investment program. The problem is that when you become a millionaire, then you have a problem, because market can go down 20, 30, 40, 50%, not if you don't understand when to step aside. So we teach also the active investing, meaning you don't need to be trading every day. You just need to know when to step aside. So when valuations are stretched, then you need to take some money off the table. And as I think if you try to understand, price and earnings are supposed to be correlated, right? But in the stock market, it's, you know that based on liquidity, based on interest rates, when interest rates are going down, sometimes the price will overshoot, so it becomes overbought. Then you have to know when to step out. And then when it gets oversold, you know when to come back in. So I call those as active investing. And then of course, the one that we're talking about is really just trading, meaning you have to be actively trading the market. But in actively trading the market, you have to know all the different strategies. which is from a position, which is a trend trading, position trading, which is, I use the 10, 20, 50-day EMA just to be part of that. And then position trading, that's position. And then momentum is using a 5, 10, 20-day EMA just to be able to make sure that it's a 60 to 190 degrees. And then just a lot of times when it's momentum, I just scalp the market. I just use it to scalp the market. But those are the easy, what they call the easy money. And then the swing trading, as long as it's above the 200-day EMA, I use it as a swing trading. And then once it breaks the 200-day, then it's the beginning of a reversal. And the capitulation, we really look at it very carefully. The capitulation we own, for the global markets, we only use the index to do the capitulation. For example, like what happened last year, when we see markets are really way oversold, we use a one-day reversal, or we use a parabola to be able to enter, or a 10-day EMA to be able to enter the capitulation. And then once it hits certain major resistance, a 50-day EMA or the 200 EMA, we start taking money off the table. So the mean reversion, or what we call the capitulation play, is very important also now that you have to understand it. So of course, these are the hard money. We don't teach this in the developed markets, because when the developed markets, when the market goes down, sometimes it's really because there's a fundamental problem. So we don't teach capitulation or mean reversion when it's not index related, meaning if the index are going down, then we can use it, then we trade it. But if the index is still up there, and then you see huge capitulation and individual issues, we don't touch it, we don't teach it. In the Philippines, we do. The reason is simple. In the Philippines, the market is illiquid. So a lot of times, a lot of these companies, sometimes in a bad quarter or two bad quarters, you will see the institutional brokers selling it down. And when it gets sold down, what will happen is that you will see insider buying coming in. I mean, you can see the insiders buy coming in, and then when we do our numbers, we know what's the fair value for those companies, and when we see huge disparity, then we basically follow the insiders. But we still follow it technically. We have to see the volume coming out at the bottom. We have to see the parabola is there, the 10-day EMA is there. But of course, as it rallies, we will start lighting it up already. We only teach this capitulation, mid reversion, only in the Philippines. We don't teach that for the global markets. But for the index, like what happened last year, when we see it, we will participate only in the index. We don't touch it on the individual issues, because if it comes down, there's already a problem, right?
I see. So let's go back to a bit more about your own personal trading journey, right? So you shared about all these different types of trading methodologies or even strategies, and is there any one that particularly you have a stronger passion and interest in, or do you think that all traders will need to know all of these and be able to apply all of these different strategies at the same time, or maybe in different market conditions?
Well, what I did was I had to show the different strategies, so that because, like for example, in our market today, you would see market is overbought, right? The whole market, the global market is overbought because of what happened. The mean reversion from December, the market has gone up so much. No? So you're seeing an overbought environment wherein you need to understand at this particular junction, you need to be able to identify what issues to buy. And you have to the expectation is that it can break out, and a lot of false breakout are coming into this at this particular moment, because the market are overbought. So when markets are overbought, I do a lot of scalping only. I just limited to scalping and a lot of setup, but a lot of times it's a false breakout. So what I teach is also that you have to make sure that in the first 10 minutes, the market has gone up already, you have to sell it already. So a lot of scalping method, when I say scalping method, I'm using a lot of strong issues, channeling up, 60 degrees, 90 degrees, but I only scalp it. So I don't hold it overnight.
I see.
My trading is about 30, 40 minutes I've done already.
Okay, so it's pretty much intraday kind of thing?
Well, I use the daily to go in, but it's an intraday out.
Okay, so if you can reflect back on your own learning journey as a trader, could you still remember what were some of the terrible mistakes that you made in the past? Because I think that one of the best ways to learn to become a better trader is to learn from accomplished traders' past mistake. So I think this will be really helpful if you could share, if you could remember what were the bad mistakes that you made in the past that you think that traders should know.
Well, the thing is that it's very important that a trader should understand that if you're in the market, you have to know whether you're an investor, long-term, and if you're a short-term trader. Don't mix the two of them. Because a lot of times, most of us, when we like a story, we are using, let's say we're using a short-term strategy to go in and out. And a lot of times, the volatility will kill you. And then you eventually hold on and become an investor, right? You know, short-term trading becomes a long-term investment. So I will always tell them is that you need to know who you are. Are you a long-term investor, or are you an investor, or are you a short-term trader, which is a spec? So from trading and investing should be, they have to know the difference. And then when you're trading, you have to treat trading as a business. It's a business. So in other words, you just trade on setup. Only when there's a setup, then you go in, then you have to get out. Because if you don't get out, if you hold it as much as you can, then it's a totally different picture. So what I did was I pre-qualified the issues by identifying whether this company is informed speculation, it's a young growth, high growth, mature stable, or a declining business. And from there, I can already identify what strategy to use. Right? Because if it's an informed specs or it's a young growth or high growth, then you would see it's like trend trading, a lot of pause that wherein you have to participate, right? So these are market cap are very small, so we call it informed specs. A lot of these companies, you have to understand what sector they're in. Is it a biotech? Is it a cloud 2.0? A lot of these things that you have to pre-qualify, and then you just use your the 10, 20-day, 50-day or EMA or position trading to be able to ride the issues. And you really need to know the discipline of the stops, because it's very critical. Without proper stops, without understanding what you can control. What you can control is that you have your entry point, you have your exit, you know your VAR, what's called value at risk. We normally teach a 1% value at risk. On position trading, and just 0.5% on momentum trading on scalping. So a lot of these rules which you need to understand. If you don't understand the rules of the game, you don't want to be in the stock market. And there are two things that you have to understand. One is price stop to determine your bar, your cut, and a time stop if the setup is not going your way. So the time stop is also very critical. So whenever I want to buy something, it has to go up already. If it doesn't go up, I square it already. On my daily momentum scalping strategy.
I see. So you mentioned earlier on the part where we need to look at the financial markets from an investing perspective or a trading perspective. So if let's say I have some capital and I'm starting to get interested in the financial markets, how would you advise me on how I should focus, whether on investing or trading? What are the pros and cons for both from someone who's new?
Well, I think they have to really know who they are, right? Because if they don't have a time to learn all these things, I think it's really very difficult for them to be able to make it. So they have to understand that if they don't have the time really to learn all these strategies, they might really get into trouble later on, because a lot of times they think they are trading, but eventually if they lose money, they'll end up they become long-term investor. So I think it depends on each individual. But if they have some capital, they have to really learn how to. They have to learn I think if you have no money, it's easier. If you don't have money, for example, we teach the masses. When we teach the masses, we just teach them, just buy the index, Philippine index fund. We're growing at 10, 12% compounded rate of return. So just accumulating what is easier. Like I said a while ago, is that when you have now money, then that's a challenge because you have to learn a little bit about markets, when to step aside, when to come back in, when there's a huge crisis, right? So if the person that has some money, it's more challenging because they really have to learn all these rules so that they'll understand and to protect their capital, or else they can lose a lot of money. They just go in, or they have to attend seminars, identify, like for example, Trader Wave, and then you're teaching them how to do it properly. But I always talk about it is that people like to make money, but they don't want to put in time. I mean, that's really the dangerous part about the stock market, because in the stock market, you can open an account and you can start trading already, right? Well, if you want to learn how to fly a plane, you need time, 2 or 3 years before you really need how to do it properly. So in trading, I think it should be the same, right? In investing, it should be the same also. You have to understand what you're doing, and you have to learn really from mentors just to be able to shortcut the learning process. Because like me, I've been in this business for the last 46 years. And that's why I was just lucky I have some businesses to sustain all the mistakes that I went through, right? If not for my businesses, the cash flow that I have, I would really be in trouble.
Yeah. And I still remember quite clearly and vividly when I met you up in last August, last year. You were so passionate about discussing about all the different trading strategies, or even analyzing the prop traders that is in your company. How are they performing and how they can actually do better and stuff like that. So I have more questions to ask you with regards to that. But before I go on to that, for those of you who are actually watching into this interview that I'm conducting with Edward Lee right now, before I pose more questions to him later on, I would like to also take this opportunity to let you know that Edward will be gracing the Global Executive Program 2019 in Singapore, hosted by Calum Trading Institute, a premier trading education institute that is based in Philippines. And this is going to be a 2-day paid workshop held over the weekend from 24th to 25th of August to teach working professionals the art and science of part-time retail trading strategies and workflow. And in this knowledge-packed event, Edward will be joined by Lawrence Lee, the president of Citisecurities, one of the largest proprietary trading firms in the Philippines, as well as Edmund Lee, the president and the CEO of Calum Trading Institute. So if you are keen to find out more, you can actually, if you are keen to find out more information about this 2 days workshop, you can head to traderwave.com/GEP2019 to find out more. All right. And I'm personally attending this workshop to learn and interact with these 3 highly accomplished traders. So you might want to consider joining me as well. All right. So Edward, back to you again. I suppose that you were first an accomplished trader. Subsequently, you started a brokerage firm. And I understand that subsequently you also founded the Citisecurities, which is the proprietary firm as well, and Calum as well. So how did all this happen? Was it something that you planned way in advance, or was it something that came along the way? So when did Citisecurities started, and what's your motivation for starting it back then?
Well, our passion for trading has always been there. And in 1983, during the martial law days, most of the brokers are doing very badly when the volumes are very, very small. And I was offered to buy a local security company for 15% for a local security. So I bought it. I invested in 15% of that company in 1983. And then what happened is that after I invested, Ninoy Aquino was shot. And the whole market just went to zero. And in fact, the one running it wanted to close it down, and I said, I just bought 50% of your company. I mean, there's no. I mean, so what I did was I tried to help in paying all the salaries of all the employees. Right?
So what does the company do, by the way?
They're a broker, a traditional broker.
Okay. Broker, it's just a broker. Okay.
Yeah, broker. And then what happened is that so I started when 1985, 86, 87. I started accumulating some companies, and well, of course, I didn't know that 1986 the ESA revolution will come, and most of the stock just went to the moon, right? So I sold the stocks that I invested, and I bought the company at full value. I think the seat was just for 400,000 pesos. I bought it for 2 million pesos just to be able to be in the business immediately. And I changed the name to Citisecurities. So did very well there. And then, of course, we were the new kid on the block, right? Everybody was getting out of the Philippines except us because we knew that it was the beginning of the EDSA revolution was the beginning of the Philippine growth story.
So Citisecurities, when you founded Citisecurities, was it a proprietary firm right at the start, or was it more of a brokerage that you turned into COL thereafter? How was the transition like between these two companies that you had?
Citisecurities was always we have some client, but it was always a prop trading company. So prop trading local stocks. Eventually, because of we're actively in the market, and we also have some exposure in the global markets. So it was always a prop trading company. So in fact, Citisecurities is changed today. We just got our new name 2 weeks ago. It's called Citisecurities, CTS Global Equity Group Incorporated. So we're changing the business model, not only for local stocks, but also for global prop trading. So it's really in preparation for trying to list the company a year or 2 or 3 years from today, right? So it's going to be a listed global prop trading house that will be listed here in the Philippines. Yes.
So is it going to be like the Berkshire Hathaway for trading instead of investing in a way?
It will be just focused on trading.
Yes, just focus on trading. So instead of Warren Buffett's way of investing, this company, which is going to be public listed, is going to just focus towards trading. Yes. If anyone who decides to buy the shares of this company on the secondary market, will mean like they are trying to get exposure to that group of traders that you have that will generate long-term returns for the company in time to come, right? I see. Oh, that's fantastic. So a little bit about the group of traders that you have actually amassed over the years, managing the proprietary trading for you. I can see that you were very passionate about actually looking at how those traders are evolving and the kind of performance that they have. So what is the motivation behind that you're so passionate about their performance and studying how they are trading and their trading strategies and stuff like that?
Well, I've been doing prop trading way back in the 80s, right? And from the olden days, at that time I thought that I can teach anybody to become a successful trader. That's what I thought. At the height, I have about 85 traders, and for trading global market, trading the US market. And I really thought, because when the online came in late 90s, our worst trader, we sent them to the US and they started doing very well, right? So when I started looking at it, I said, my God, this is so simple. So I expanded from 25 traders to 85 traders. And I thought I could teach anyone just to become a global trader. The sad part about all this is that we didn't have rules. We didn't have risk manager looking after them. So during the bull market, they make a lot of money. During the bear market, we make even more money. The problem is that during markets that are neglected, for example, after the crash of the NASDAQ, the market just basically died on us. I mean, I never expected that the US market will die on us. And so what happened is that there was a long period of difficult there was no volatility for us to be able to sustain it. That's why sentiment became a part of our teaching. Unlike before, we just use fundamental to know what to buy, and then we use technical analysis to time it. And then we included now the sentiment part, which is very, very important also, because once you understand the sentiment, it's a buy low, sell high, it's a neglected period. Then once you understand that, then it's easier. It's easier. But because of what happened to us, that experience is that I decided to close the business. So I moved back to my old, I built a huge trading center, thinking that we were able to consistently do well. The sad part about the trading is that the trader, when they make a lot of money, they will do a lot of crazy things. And without proper risk management, without proper watching over them, it was a very challenging environment for us. What happened is that from the olden days, we always believed that all these traders has to go to the volatility of what we call the emotional cycle of investing. The sad part is that when when their losses have piled up, they basically will leave the industry because we are the one financing it, right? And there's no obligation for them to pay us back. So it was a very difficult business model, which is very hard to maintain because when they win, they get the pie, they get the profit sharing. But when they lose, it's all us, right? So we would change that. We have changed that completely. Today we have a retention. Instead of paying just outright 25%, we pay them 15% today, and then 2 years later, the 10%. And then we watch them. We have 3 risk managers watching them every move. So we push them to be more systematic rather than more discretionary. So, and you can see the numbers that I've shown. If you go to YouTube, you can see that I was showing those numbers is that the systematic trader eventually makes more money than the discretionary. The discretionary, they think that they're doing well, but they win and they lose the next day, right? So you can see that with proper guidance, proper rules, proper setup, and then put a journal, you'll know that you can really do very well once it's more systematic rather than more discretionary.
I see. So if we can try to translate that to an individual part-time trader, for example, what do you think are some realistic steps that he can take to ensure that all these things are also in place as well, even though he might not be working in a proprietary firm, in order to stand the highest chance of becoming a good trader? Is it good, maybe, for example, to have accountability partner or have someone to tell you about the risks and to manage you in a way? Because I remember you told me before that actually having someone overlooking all the traders is actually better for them, is good for them in a way. So can you elaborate a bit more about that?
Well, the thing is that the problem with the traders is because there's such what's called a blind spot barrier. Each person, you have your ego and you have your blind spot barrier. This is in the YouTube of Ray Dalio. What is really important is that sometimes you have your confirmation bias, wherein you think you're doing the right thing, but in reality, your numbers doesn't show that you're doing well. So you need somebody to be you need to be accountable to somebody. They're accountable to us, right? So today, most of the traders, everything is scientific. We look at your hit ratio, we look at your edge ratio, and if you're not within those parameters, there's something wrong with you already. So hit ratio, 30-40% maximum. You don't want to be 20% hit ratio, right? And then edge ratio, at least a minimum of 2.5, meaning for every $1 you risk, you should make 2.5. And from there, over time, you will really do well. You need somebody to, either your partner or your spouse, so that, there are a lot of things that you cannot see. Sometimes you think you're doing well, but in reality, you're not. And you don't want to be wasting too much of your time doing something which, because being a full-time trader is really very challenging. It's not easy because if you're going to put food on the table, I think if you read the book of Momentum Masters by Minervini, and he was interviewing a few other great traders, and they said the same thing. If you're going to put food on the table, you're pushing yourself every day. You'll do a lot of stupid things because there are a lot of setup that is not a real setup. You will think it's a setup, and then you'll just trigger it, and you will really just catching up. You will always lose money, and then you'll try to recover it. And so it's very tiring. So we really don't advise people to be a full-time trader, especially if they don't have enough cash flow to make sure that they can sustain it, just to be able to learn the whole trading. I call it a business.
I see. So in a way, what you are suggesting is that people should actually view trading more like a means of compounding the savings or the capital that they have, rather than thinking from the angle of using trading as a means to livelihood. Is that what you're trying to say?
That's correct. I think it's very difficult. It's just to increase your return rather than thinking that you can really do it full time. Because if you do it full time, yes, you have to make sure that it's not, you're not putting food on the table, right? You're not pushing to make money just to be able to eat for that particular day. I think it's really very challenging. But once you're able to learn it, of course, 85% lose money, but the 15% will make a lot of money once you understand how to do it properly. That's why I always say that if you want to speculate, you need to know the rules of the game. Because if you don't know the rules of the game, in fact, this is what we found out, is that most of our traders, very good traders, successful traders, very systematic, does very well for us, but on their own personal trading, they're not doing that well because there's nobody watching over them to tell them to get out of the market, right? So they will become very emotional. Let's say like they look at a good story, then there was a what they call the false breakout, but then they say, okay, I'll just leave it anyway, it's good. So they become long-term investing, right? And sometimes stocks can go down 30, 40, 50, up to 80%, right? Even though the numbers are doing well. So if you don't time it properly, then you can lose money. You can lose a lot of money. So a lot of these traders we know is that on their personal account, they become very emotional and they become long-term investor rather than like us when they work for us. We basically monitor them and we make sure that they have to get out of their position. If not, they'll be out of the game.
I see. And do all these traders that's under your wings right now, are they actually trading using the exact same strategy as one another, or do they have do they get to actually choose the kind of strategy that they want to use depending on their personality or depending on market condition? Do they have a choice, or is it something that's being given to them to just follow and do it?
We teach them all the different strategies, and they have the flexibility to decide whether they want to use the easy money or the hard money, right? Easy money are the ones that are momentum and trend trading, position trading. The counter trades are the much more difficult, the mean reversion and the reversals. No? But there are rules for that, and some of them really do very well on those kind of formation. We don't really. They have a choice. They have a choice. The most important is the bottom line is that are they doing well? What's the risk, the hit ratio? What's the edge ratio? So we just look at the numbers rather than, because the Philippine market is very small also, right? So when you're very small, I mean, you can't do too much concentration in, especially in the stocks that they participate, the one that's on the young or the informed specs, right? That's where everybody is, right? But we put a cap on those issues because you don't want to be over concentrated on those kind of, because you can't get out because it's illiquid.
So from you looking at how they decide what kind of strategies to use for their own trading, is there any particular pattern that you notice, like what kind of people will choose what kind of trading strategies? Is there a certain pattern to that, or is it something that you can't figure out what's the pattern of people choosing what kind of strategies and horizons and time frame to use?
Well, if we're trading the US market, there are only two strategies we teach, we encourage. It's the momentum strategy, which is the simplest easy money. You just look for strong issues pausing, and then you want to participate in it. You can scalp it. The second is position trading. If you know the story, you wait for it what we call the magnitude duration. During the quiet period, before it breaks out, you start accumulating, and then as it breaks out, since you know the story, you know the intrinsic value, you can hold it for a much longer trade. So those are the two strategies we encourage in the US market. In the Philippines, we don't have a choice because we don't have those issues. Most of our issues that are listed in the exchange are mostly mature growth and mature stable. And most of them are just on a box, either on a box or on a reversing. So you need to know, during those periods, we just need to let them understand that it's a buy low, sell high rather than a buy high, sell higher, right? So a lot of them does very well also in the reversals. But in the US or even in Hong Kong or even in Japan, which we all trade, there are only two patterns: momentum and position trading. I mean, those are what we call the easy money. You want to be sticking to those strategies rather than looking at too many things, right?
Okay. So there is this common fear about things like AI, machine learning. potentially being able to take over all these traders? Because ultimately, if you look at it, they are also basically trying to apply a certain fixed rules as a human being. So do you potentially think that this can be taken over by machine learning or AI in a way to do all this? And definitely machines, there's no emotions, so which is also one problem being taken out at the same time. What's your thought on that?
I'm from the old school, right? Most of this AI, you probably, if in momentum strategies, maybe it can be taught. But the thing is that human beings, that's what it is. Of course, we have our weaknesses also. Whether you sometimes the formation is there, you still doubt it, right? But I still believe that you need the human intervention because we teach also time stops, right? Which I don't think machine has. I don't know if they can design that, because most machines are basically just momentum strategies. I mean, they can't teach them to be a buy low, sell high, right? I mean, those are a lot of times. So I don't really believe that the machine can duplicate the human being. The trader, once they're disciplined, once they're in a community, I think will always outperform the machines.
And at the same time, because it is also pretty important to be able to look at historical, what has happened in order to get a certain visual understanding of what is likely to happen as well. So that's something that machine will not be able to do so easily, because every issues are actually very different in terms of the way they move, in terms of their personality and the behavior of how it moves.
I really believe that because you have to remember, machines are, the formula is also being done by a human being, right? When these are designs, and it's most of the high frequency trading are just on a scalping method. They break it out and then they sell it already. So I really don't believe that.
So that means the longer the time frame, the harder it is for.
That's correct. Yes, to be sustainable.
To have an edge
yes,
over the longer
right.
time frame. I see. All right, cool. So Edward, so what keeps you busy nowadays, man? Are you still focusing very much on trading related things, or on other businesses, or just enjoying life right now?
Well, you know, our business is very cyclical, right? So what keeps me busy today is we're building our data center, hot backup, out 80 kilometers away from Manila. So that's what keeping me busy. I do a lot of lectures, talk for the masses, because that's what I love, educating them on financial literacy. I have been very busy for COL on the workshop. You can see me on YouTube. The last few months, I've been going around the region, doing workshop for the journey, all the investors' journey, from a passive investing to active investing to actively trading, and we've chopped it into 12 series. Very busy, it's really very busy. We have our Trader Summit on Saturday.
Yeah, this weekend, right?
That's right, on this weekend. So, you know, our industry is really a lot of education, and we really have to give it to everybody, because so that at least the rules will be known, so that they don't get burned. Because what is really important is that we normally don't really like to teach market timing, because of our market is very illiquid, right? So we just have to teach them to just buy the good companies and do a peso cost average to be able to just buy the business. So it's a much easier way of getting people to sign up and invest for the long term. But the sad part is that everybody just loves to speculate. And 70% of our business are just 5-10% of our total customers base are contributing 70% of our revenues, right? So that's why we need to own the space. That's why we're coming out now, really doing a lot of workshops, so that to guide them, to help them do the right thing. Because if not, I mean, we're going to lose our customers also, right? I mean, they speculate. Most of them will buy on news rather than sell on news, right? So we're teaching them what we call gap up on news, gap up on no news. So we need to guide them already, because if we don't own that space and we don't start teaching them to do the right thing, And it's not that we don't know, we understand it. The only problem is that when we started doing it in 2005, 6, and 7, when the market turns around, they don't also sell. I mean, those are the challenges that we have. We call it wicked learning. You know, we teach them, but they will have their own biases. And it takes a while before they really believe in that we're trying to help them do the right thing. The sad part, of course, is that we're only 40% right. That's the problem, because it's a game of probability. So those are the challenges for when you're teaching market timing, because it's a game of probability.
I see. All right. So, Edward, before we end off today's conversation, I just want you to maybe share a bit about this global executive program that you guys will be doing in Singapore. What is the motivation behind setting up this program? Is this the first time that you are doing it in Singapore or in region? And what do you hope to achieve out of this program?
Well, you know that the KLUM program, the FTSR, which is the Fundamental Technical Sentiment and Risk, the framework, we've been doing it for the last 5 years already. And today, we're always full. Our executive course is very full. I think we do that 5-6 times a year here in the Philippines. In fact, the last executive, we have some people that foreigners that flew in from the Middle East just to be able to attend the weekend course. It's much cheaper for them, according to it. And what is really important is that because we have been in Indonesia for the last 5 years, and we have a lot of people who I used to fly in there and help them, teach them, do some workshop with them. And a lot of them are already enrolled for this global weekend course. And so we have a lot of also OFWs in Singapore, which is also clamoring for us to be there. So hopefully it will be a weekend of a lot of sharing, a lot of hopefully that they learn something from it. And once they become once they enroll in this program, it's already part of the KLUM community, which is the most powerful. Because once you're in the community, then you can ask all the questions, ask different kinds of formations. We basically provide some stocks ideas. And so far, it's been 5 years, and KLUM has been doing well. Fantastic. So we're trying to see if we can go to the global, go to the region, and hopefully that we can get people to try to participate in it.
I see. Sure, fantastic. All right, so thank you so much, Edward, for sharing about your own trading journey as well your thoughts about what's important in the trader's journey. And of course, for those of you who are listening in or watching into this particular interview right now, before we end today's trading conversations episode, I'd like to remind you again that Edward will be appearing at the Global Executive Program 2019 in Singapore over the weekend of 24th to 25th of August. So if you are keen to learn from Edward how to profit from the financial markets as a part-time trader while keeping your day job as a working professional, please head to traderwave.com/GEP2019 and find out more about how to participate in this paid workshop. So that's it for now, my friends. I'm your host, Philip Teo, and I hope to have you joining us again in the next episode of Trading Conversations. So thank you, Edward. Have a good day to you.
Thank you.